Recent tax legislation has provided some relief for seniors with regards to tax on Social Security. Are you one of those seniors? Hi, I'm Doug Ray, president and founder of the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne. You've entered the vault. Don't forget to hit those like and subscribe buttons down below the screen there to catch future episodes of The Vault with Doug, Garrett, and myself. In this episode, we're going to go over recent legislation, who's eligible for it, who's eligible to benefit for it, what the 2025 thresholds are, and what this $6,000 senior deduction is really all about. Let's go ahead and jump into this episode here. Doug, recent legislation is what we have to refer to it as.
Yeah, recent legislation on Social Security. Before we get into that, for everybody's sake, let's review how Social Security gets taxed in the first place.
Not easy.
I'm going to pull up a spreadsheet here that'll follow along as I go through it.
It's going to get complicated now.
So basically, Social Security is taxed by your income. It's called provisional income. And we have done previous Vault episodes on what exactly is provisional income. So I'm not going to go into that now. We'll just let you guys go back and refer to those episodes. But if you're single and filing, or you're head of household, or a qualifying widower, if you make less than $25,000 of that provisional income, then none of your Social Security is going to get taxed. However, if your income goes between $25,000 and $34,000,
even by $1,
then up to 50% of your Social Security gets taxed at your tax rate. Then once you cross that $34,001 threshold, then up to 85% of your Social Security is going to get taxed at your tax rate. For you marrieds who file jointly, less than $32,000 of provisional income, then you pay no tax whatsoever on Social Security. However, once you go over that $32,000 and go under the $44,000, so the bracket's $32,000 to $44,000, then 50% of your Social Security is going to get taxed at your tax rate. Once you go over $44,000, then up to 85% of the Social Security is going to be taxed at your tax rate.
So that's how Social Security is taxed. We actually refer to those tax bumps as the tax torpedo.
Yes.
In our line of work, we want to avoid that. If we haven't done an episode on the tax torpedo, we will get that out to you so you can better understand that, because it's just $1 over can increase your taxes by thousands and thousands of dollars. So you want to avoid that if at all possible. All right, Doug, now that we've explained that to them.
Yeah, so how has new legislation affected these tax tables? What they did for seniors 65 and older is basically they put in a provision for standard deduction. They're going to increase your standard deduction $6,000 per person. Right. Married, filing jointly, that's another $12,000.
Nice.
So what they say by their calculations is this is going to exempt somewhere around 80% of seniors who pay tax on Social Security. Now, here's the catch. It's not permanent. It ends at the end of 2028.
Wouldn't you know it, an election year.
Unless Congress extends it on further. The other caveat is it's income limited. So for singles who file single, if you make over $75,000 a year, then your benefits from that extra deduction are going to be phased out. And married filing jointly, if your benefits are over $150,000, or I should say your provisional income's over that $150,000 limit, then again, you're going to be phased out of this extra standard deduction.
A lot of caveats we're going over here, Doug.
Lots of caveats.
Lots of exceptions.
Yeah, lots of as always,
Right.
in tax legislation.
It sounds simple on the surface, but
Yeah.
once you peel back the onion, there's a lot of exceptions that will disqualify some people from this.
I won't even get into how states tax it at this point in time. Just to know there's 41 states that do not tax Social Security. Look up your own state to see if your Social Security gets taxed. I think that covers it. It's pretty simple.
It is, yeah. I will mention, just to clarify, they billed this when they were making the legislation as Social Security won't be taxed, but really what it more accurately is an additional standard deduction for seniors.
That's all it is.
Because you get it at 65, whether you have filed for Social Security or not, and you don't get it at 62, 63, or 64, even if you have filed for Social Security.
Yeah.
So that's really more accurately what it is. But there you go. That's it in a nutshell, how Social Security supposedly is not taxed anymore. Want to thank you for joining us. One more time, bring your attention to those like, follow, and subscribe buttons down below there. Go ahead and click on those. They're your friend. You'll catch all future episodes of The Vault with Doug Garrett and myself. As for this episode, I'm Brice Payne.
I'm Doug Ray.
It's been The Vault. Hey, it's Brice Payne with the Wealth Guardians. Thanks for watching our weekly series, The Vault. Do you know we also have a weekly radio show where we discuss all things retirement? You can listen to the Wealth Guardians radio show live on 94.5 WPTI in the Triad on Saturday mornings. But if you miss the live broadcast, you can also catch it on our YouTube channel or find us on your favorite podcast platform each Saturday morning. Make sure to subscribe wherever you listen so you can get notifications when we release new episodes. Want you to remember, good retirement plans do not create themselves. We'll talk to you soon.